All right. Hey, everyone. Mark here. Let's not waste any time. Let's get straight into this. Hold on. Let me adjust this microphone and we'll get going right away. Thanks for joining me, everyone. All right. So really quick, before I start saying anything, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Good to see everyone. Today is Monday, and I am simulcasting on TradingView and on YouTube. Okay. So obviously I have to follow house rules. For those that are watching on TradingView, this is now the time to start sharing your questions. So here's how this works, okay? So first, I go over the economic calendar, all right? Okay, hold on. Yeah, I'm seeing a problem here. Hold on a second. I may need to refresh this. Hold on a second. Let me try refreshing this. All right, you guys, can you guys see me? This thing just gave me a hard time here. Can you guys see me? Just give me a couple of yeses real quick. Okay. I know I have to wait a few seconds here. Oh, all right. You know what? Hold on a second. All right, this is new. Okay, hold on a second. Sorry, hold on. I thought I put this in. For some reason, TradingView is not, I guess you guys can't see me on TradingView. All right, I can't fix this now. I thought I had that set properly. I guess not. Okay, hold on a second. I have to get my charts back up here. All right, so I guess I'm not on TradingView. I don't know what's going on there. All right, hold on. Sorry. All right, this is all because of, I don't know what went on with that TradingView thing. I can't fix that now. Hold on. Just give me a second. All right, I'll have my chart up here in a moment. Okay, you guys should see my chart. All right, let's continue. All right, I was trying to save time, and that's what happens. All right, so anyway, yeah, so I'm not on TradingView. I don't know what the problem is there, but I'm not going to mess with that right now. All right, so first things first. As you know, today is Monday, like I said before, and there's three things that I go over. First, I typically go over what? Let me ask you guys, okay? This is the interactive portion of the stream. What's the first thing that I cover before I get into the Bitcoin chart and then answer your questions? Who can tell me what's the first thing I cover? Because I'm asking you guys this because you should be doing this on your own every Monday. Who can tell me? Bill, don't answer. Bill always answers. Let me just say hello to a few people here. Right? I got all my regulars. We got Jay, good to see you. Levant, all right. Mr. Plow, okay, cool. Bill, Liliana, good to see you all. Steen, all right. Freeloader, cool. So let me see the calendar. Oh, Bill, see, I told Bill not to answer the question. All right. Well, anyway, so economic calendar. So now here's the second part of the test, everyone. You should be checking your economic calendar, whether it's on TradingView or wherever else you check it. Okay. Now, who can tell me what is going on this week on the economic calendar? Is there anything of importance? Let's see if you guys are looking at the right information. All right. This is an exercise, and you guys should be going through this on your own every Monday. It's the first thing you should look at. Okay. So who can tell me what's on the economic calendar? Calendar ZN1. Well, ZN1, that's cool, Avant. I mean, the ZN1 is a separate thing, but it's something you should look at. But the main answer is the economic calendar on Monday, because you want to see what events are what scheduled events may be coming during the week that you should be prepared for so that you can better manage risk. So let's see what we have here. Core PPI, Levant says, okay. Now that I'm assuming that's the US one, right? Because some other countries, I guess, can have that. So what day is that, Levant? Core PPI. And is that it? Is there anything else that we should be paying attention to? Because to give you guys the answers, you should be paying attention to US inflationary numbers, okay? So core PPI, when is it coming out? Can you tell me? That's coming out, okay, cool. Hey, Constantinos, good to see you. All right. So when's it coming out? Can you take a look at? Sure. Okay. Yeah. Good. You can put your questions in now. And also, if you want to share what country you're from or what city, that's always a fun fact. I like to do that on TradingView as well. I don't know why I'm not streaming on there right now, but I got an error and I can't fix it right now. Okay. On the 18th. So that's what, in 2 days, right? That's Wednesday. So usually a number like that comes out either at 8:30 or at 10 o'clock or at 10:30 a.m. Eastern time. Okay. I don't know exactly, but you should double check on that. That is an inflationary number. Okay. So the whole point of looking at the economic calendar is you want to know what key events are coming out. You're looking for US FOMC meetings. You're looking for Chairman Powell's speeches. You're looking for non-farm payrolls. You're looking for any type of inflationary number like CPI, okay, which we had on Thursday. And we've had this ridiculous move since then, right? So you want to be aware. Now, again, it's not to trade. Don't be confused. It's not to trade the number. You're not going to trade the number. You want to be prepared for it so that you can manage the risk going into the number, whether that means you have a position on that you may have to adjust, or maybe you don't have a position and maybe a setup is developing, then you have to realize, oh, the setup is developing into the number. I should account for that. Okay, that's the point. So 8:30 Eastern time. Thanks. So 8:30 Eastern time on Wednesday, there's your PPI number. That's the only number you really have to pay attention to this week. If you look at an economic calendar, you'll see all kinds of stuff from all other countries. Okay, and the thing is, the US numbers are the ones that really carry all the weight. All right, and look, I'm not just saying that because I'm from the US. It's just that the US, the dollar is the world reserve currency, and that's what moves markets. Okay, look, those aren't my rules. That's just the way it works. So anyway, keep an eye on those things. All right. So that's really the only number to pay attention to. All right. So that's the economic calendar. We can get that out of the way. Let's now get into the chart, shall we? And I have this small chart here. Let me make the chart bigger. I'll click on this one over here. Now, I'm not on TradingView. Let me just try refreshing this one more time. I'm not going to mess up yeah, I don't understand that. Okay. Anyway, so here's the thing. Let's start talking about this chart here. And as you can see, like the title of this is Go Short or Buy the Retrace, right? So that's really like the main idea that I want to cover. Now, because I'm not on TradingView, I can speak a little more freely because I don't have to worry about house rules. Here's the thing. If you're not in my Discord community, you should check it out. There's a free link in the description. Go to my Discord chat. There's a learning resources channel in there that Bill really contributed a lot of information to. And that is a good academic foundation. Before I talk about all this Bitcoin stuff, if you don't have an adequate academic foundation, only you are going to suffer. And the reason is you're going to basically fall victim to all the emotional appeals that people put in front of you out there in this type of environment, okay? So there's a lot of information in there, particularly the efficient markets hypothesis, okay? You should know what that is. Now, yeah, it's not sexy. You're not going to make money with it like tomorrow because it's not a strategy. Everyone thinks like there's some kind of missing piece of the puzzle that if you just solve that puzzle, you're going to be this profitable trader. It's all nonsense, okay? They sell you this lie. They sell you a lie that charts can help you forecast the future. They can't. Not the long term. We can see from using a chart like this, we can basically get an idea of what's possible over the next few weeks. That's really the only realistic window we're talking about. A chart can also help you mitigate risk or identify or quantify risk. That's the key, all right? Knowing your risk and working around that risk. That's the main thing. Markets are random. And I know I say that a lot, and people just take it for granted. Oh, yeah, markets are random. But then the next question I get is, so what's your opinion on Bitcoin? Do you think it's going to be at 50K by next week? I just told you markets are random. Okay, there's no way to know. People that tell you these things are lying to you. They're lying to themselves, or usually they have some kind of other agenda. That's the way it is. Understand, any public forum, and I keep seeing this over and over again, of people promoting, oh, you join this community and you're going to get this group thing and everyone's going to help you. That's the worst possible thing you can do, is follow the herd. Okay, a professional or an experienced trader will look at the opposite side, because the herd is usually wrong. And usually these people that like to push this herd mentality, they usually appeal to your emotional needs, right? They say, oh, you're going to miss out. You're going to miss out on Bitcoin. You better buy some now. I told you it was going to go to 50K, right? They usually say things like that. Please, my goal here is to show you how to be objective so that you can make decisions and you can better judge the information that's coming your way. Most of the people in this game are not qualified to be sharing this type of information. But since there's no accountability, and since people can just make up names, like they can be a fake name, they can change their name, they can say whatever they want. Okay, just keep in mind, I'm a chartered market technician. I use my real name. All right, so I'm accountable. Plus, I have to stick to a code of conduct that people that are not CMTs don't have to do. They can say whatever they want. I can't. Okay, because I'm being policed by the Market Technicians Association. Keep that in mind. You should be very careful with the source of information that you choose to believe. And keep in mind, it's human nature to believe lies. We like to be lied to, especially when the lies are very comforting. Please keep that in mind as I go through this analysis. All right, I know I talk a lot. Now, let's get into this. First things first. So we had this Bitcoin move. Now, back in December, right, I called the short. Now, I saw some talk here about the shorts. Yeah, I don't short Bitcoin, right? That's nothing has changed there. I don't short it. I'm not going to start shorting it now, but I do share short ideas, okay? Because people are interested in shorting Bitcoin. So I share the short idea. I shared one over here, okay? And I suggested the exit over here on this candle. That was worth 755 points back in December. Since then, I have not called any trades. Oh, you suck. Because look, you could have called it long right here, and look how much money you would have made. You see, I called it after the fact. Yeah, okay. Thanks, Captain Obvious. Moves like this, you don't see them coming. This is obviously a short squeeze. And this momentum really started going after the CPI report, okay? Now, it doesn't really matter why. We don't have to get into why. What matters, especially as a swing trader, is where. Let's talk about that here. So first thing is, if you should read my TradingView article if you haven't. Okay, I got a lot of views on that one. TradingView may have helped me promote it or something, possibly. Okay, hold on a second. Let me just refresh something over here. These freaking people. All right. They may have promoted it because I usually don't get that many views because people usually don't like the things that I have to say because I don't lie. And I don't tell comforting things. I just talk about what I see in the market in the most objective way that I can. Okay. But in the article, I mentioned that the 22K, right? This box right here, this resistance that you can see. Let me just clean this up. This thing is just not behaving today. See this right here? That right there is a resistance area. All right, 22K. If we go to the weekly chart, let's take a look at a weekly chart real quick. You can see, I mean, that's a very dramatic move, but look where we are on the bigger picture. This is what you need to pay attention to, not the big green candle, which is what everyone pays attention to. You need to be thinking about what is going to happen here. What are the chances, or what are the scenarios? What are the possibilities in this area? Not what we have seen transpire previously. Okay, so even when I think about this, even when a candle is open, okay, what we're seeing here, even this open candle, it's price history. This is old news, okay? It's behind us. So we need to be more concerned with what's in front of us. So all these clowns that push the RSI and moving averages, all they're doing is encouraging you to look behind. All right, I encourage my followers to look ahead. All right, now, So with that being said, location is the first thing. Well, besides trend, all right, my students know it's trend first. And the bigger picture trend, I'm not going to have to go through all that here. The bigger picture trend is still at this point, it's still bearish, okay? The bigger picture trend. Now, the short-term trend, right, going back to November, I mean, we can argue now that this trend is bullish, okay? Going back to November, we have a double bottom, we have a higher low, and this is a higher high, but that's the short term. It hasn't changed anything on the bigger picture yet. That's a very key point, right? So we have this resistance. In fact, we are right back to where we were before the FTX nonsense, right? This right here is FTX. That's the FTX nonsense right there. So look, we're right back to where we were before that. Well, that's interesting, okay, but it doesn't really mean anything. What matters is what the most important fact here is where we are. So we're at a resistance, right? 22K, basically, right here. Let me just highlight 22K. 22K is right up there, okay? So, I mean, just going back, look at this. Look what it aligns with. This is a resistance area, all right? So I'm not going to pick on the level alone by itself. You have to look at all the price action around the level. And here's the historical price action. Now, you can say to me, hey, you just told us to look forward and all you're doing is looking backward. Well, I'm looking at reaction points that occurred previously because it is likely that going forward, we're likely to see similar behavior, okay? We are likely to. Now, again, I can't make a forecast with a high degree of accuracy and say, well, we're definitely going to reverse over here. I can't say that. All I know is we are in a location where selling activity is likely to develop. And history tells me that, okay? That's what I get from this. Now, the thing is, I also mentioned that about 18.3, okay? 18.3 was over here. And I said, that's the range high. I'm open to calling shorts if I get the setup. But guess what? I never got the setup, okay? I look at the daily chart for that setup. I don't look at a 1 hour chart or a 30-minute chart. We're talking about swing trades. I never got the setup. So I never had any reason to call a short. Still no reason. Even right now, there's no reason. So again, the title of my thing here, go short or buy the retrace. What do we do as a swing trader? Well, in this situation, because we have this potential bigger picture trend transitioning, possibly, right? It's not, we have nothing concrete yet, but this could be the beginning of it. We can consider both sides as a swing trader. So here's what I mean. If we touch the 22Ks, right, we start pushing into there, we're trying to. If it pushes into there and I get the sell signal, I'll be open to calling that a short. I'm not going to take the short. Let's be clear. I'm not going to take the short, but I will be open to calling the short. All right. There is nothing there at the moment. All we have is this price action playing around. That's all we have. Now, environments like this, right, when you have just a constant just push like this is great for day traders if you have the adequate experience. If you don't, you're just going to lose your money, so don't even bother. But if you do, you can play momentum. The advantage to the day trade side of this is if you're buying, if you're taking longs, like in an area like this, right, you're taking quick profits, you're not exposed to all of this risk, right, as a day trader. But if you don't know what you're doing, you're going to lose money anyway, so don't even bother, right? You need to have some very, very solid experience and a few years of experience, to say the least, being trained by someone who's proven or knows what they're doing. If you're a beginner, don't even bother. All right, now, secondly, so as the swing trader, we have a location, and we need to see the setup, and we don't have one yet. There's nothing. So if I see the pin bar, if I see the inside bar, right, if I see something developing like this kind of pattern over here, see this back here, a failed high develop in this area, I will be open to calling the short. I'm not going to take the short, but I will call it. If others are interested in taking it, it's up to you. When I call a position, I call the entry, I tell you where, I suggest a stop and I suggest targets, right? Or a target. So there's nothing there now, but this location, I'm open to the short because the general picture, the bigger picture is still bearish. It hasn't changed. Now, as we know, my students know, the bigger picture is what carries all the weight, all right? Now, here's the other side. because I said as a swing trader, you really should be considering both sides in this type of situation because the trend may be coming into question. It's still technically bearish, but it may start to change. And this right here could be the initial move. In fact, if we want to count waves, we can say this is a wave 1, we can say that this is a wave 2, and this is typical of wave 3. Okay, it's a small magnitude, but still, this type of movement is typical. So that means that a wave 4 is likely to follow. If we get a wave 4, all right, on this magnitude, now don't go back, you don't have to go back 10 years and try to label every little thing. All we're looking at is this structure, okay, isolated, that structure. If we get the pullback into the old resistance, which is basically like the 18s, 19K area, that could be a small magnitude wave 4. If you have a wave 4 and a buy signal develops in this area, especially if it's just above this old resistance, which is likely to act as a new support, then it's possible to get one more test of the high, which can offer a nice bullish swing trade opportunity. Now, will that change the bigger picture trend? If we can't get above 22K, then the answer is no. You guys follow me on that? If 22K is not compromised, and I'm not talking about, oh, look, we're at 22,100. Okay, it's broken. No, we need to clear 22K. Like we need to see 23K. We need to see 24K. If we're seeing those numbers in the next couple of months, then we have a confirmed change. Okay, and then it would be wise to be looking at supports, expecting supports to hold, looking for opportunities on pullbacks. Okay, but this could be the first one possibly, and that's really, I think, the most effective way to judge what's going on here. All right, so if we get the short setup, great. Now here's the thing, here's where people get confused. What if it just blows through and we never get the short setup? Well, then there's nothing to do. Okay, we look at the next, this area that we have, this 21.5, 22K area will then become a likely support at that point if it blows through. So you see, I'm talking about a number of scenarios here that you need to be able to have the patience to wait for and let the market deliver them. If you're getting all excited, well, I'm not going to wait for that. I'm just going to go to my 30-minute chart and I'm going to try to trade inside of here and I'm going to make thousands of dollars. You're just going to get caught. Okay, it works on a random occasion. It works, right, when you have a nice sustained move. But what about all the people that were calling it over here and say, oh, we got a breakout, we're going to 50K, and everyone bought it, and then you get stuck in this, and either you're getting stopped out, you're getting margined out, whatever, right? And then even worse, you get short on the buy. Okay, this one's a short, and then you short it, and now you get stuck in this. Okay, you can't look at after the fact. You have to look at going forward. So you guys clear on that? So scenario 1 is the short scenario, which would be the failed high, the pin bar, a mini double top, something bearish, some kind of bearish pattern or development in that specific location. Okay, if it blows through, then we have a change, and that scenario is then off. It's off the radar. Does that make sense? And if we pull back on something like that, it's not reasonable at this point to expect a dramatic lower low, not after a move like this. Okay, we have to see how the supports behave. So if you manage to pull that short off, you're targeting this area, something like that. Don't make the mistake and target this area. Now, I've talked about 14K for quite some time, but I said we should account for it. We should account for 14K. We should account for 10K. But I never said, oh, we're definitely going there. A lot of people were saying that we were. You can't have those kind of opinions because, look, the market chose otherwise. You have to listen to the market, not your opinion or anyone's opinions. Listen to the market. The market is always right. Okay? So those are the scenarios. So I'm open to calling the long if we get the pullback. And then if we get if the long follows through, then I'll be targeting the 22K area, possibly a little higher. It depends because higher lows typically lead to higher highs. The market needs to answer these questions. I'm not saying these things will definitely happen. The market needs to show us evidence, and then we need to be able to measure risk. Okay? If you just jump in now, oh, I'm just going to short it now because how much higher is it going to go? You are taking a very high risk position because this thing can continue to squeeze. Now, here's the other mistake that most fake gurus or people that say they're qualified to call these things, they look at Bitcoin in isolation. They don't consider the intermarket. All right. So Bitcoin, as you should know, does not trade on its own. It follows. It is a follower. So the real driver of markets is the bond market. Let's take a look at the bond market very quickly. All right, and then I'm going to start answering your questions. This is part of the Bitcoin analysis. And Joel, so Joel asked me the other day. He said, "Oh, you missed the bottom." Yes, I missed that because I don't put a lot of weight on supports in generally bearish trends, right? And as we know, looking back on this thing, it's generally bearish, right? Now we got stuck at this resistance, all right, which, okay, it got stuck and now it's trying to give us a sell signal. I can't make any kind of long-term determination on that, but all I know is if this thing sells off over the next few weeks and we break that support, that means rates have never changed, okay? So right now, the bond market is trying to be optimistic. Higher lows should lead to a higher high, and some people say, but it is a higher high. Look, it is. No, this is not a higher high. Okay, a couple of pips doesn't count. This thing needs to clearly go like up here. Okay, it needs to clear the area. Hesitating at the resistance and going slightly over does not count. Bonds take a long time to do things. So we'll see what we get over the next couple of weeks. Okay, maybe this thing wants to continue higher and we'll have our answer. If this thing breaks higher, then we're looking at an optimistic future. Okay, because rates will be coming off. That means pressure will be lifting, and we're looking at inflation again. All right, whatever. I'm not going to have any opinion on that. You know, even though the Fed is still in their rising rate environment, the bonds, the markets trade in the future. Okay, they trade 6 months into the future, and they could be anticipating that the Fed is going to have to lay off the rates. The market could be wrong, and the Fed may surprise everyone. We don't know. There's no way to know unless you're personally friends with Chairman Powell. All right, so we have to see how this plays out. But right now, this tells me that we don't have enough evidence to make any kind of concrete judgment. This is still could be bearish. And so, how is that bearish? Well, let's take a look at a weekly chart real quick. This is not exactly bullish, okay? That's not exactly bullish. It's trying to become bullish, but it's also tried before. It tried over here. Right? This could just be another one of those, you know, three-legged zigzag type of moves, and then back to rising rates. That could be, I don't know. But that trend right there is, I'm still not convinced. Does that make sense to you guys? That's why you need to see, you have to have perspective. You need to see the bigger picture and consider that, you know, when it comes to your speculative market intentions, like buying Bitcoin, which is a highly speculative asset. If rates rise or they start rising back to whatever, Bitcoin will feel the pain like everything else. All right. So that's the main thing. Now, let me put my Bitcoin chart back up on here, and let me get into your questions now. So are we clear? Any questions about that stuff? Let's take a look at what you guys have to say. And while I'm doing that, one other thing, let's take a quick look at the dollar index, because people are, I saw some stuff. I mean, people are just complete. There are a lot of unqualified people, right? This is the most deceptive business in the world. If you take anything away from my stream, please realize that this is worse than the used car business. Most people, they'll just tell you anything. I saw this one, the dollar is bearish, and because it broke this low, I'm going to look for shorts. Yeah, good idea. Short right into the bottom. All right. Now, the dollar, people who have no perspective or only look at time frames that are too small, they're going to argue that this is a bearish trend. And yes, the momentum is bearish, but let's take a look at you have to look at a weekly chart, right? This is not exactly bearish, just like that bond chart is not exactly bullish. This is it looks ugly from recent time, and it's just persistently breaking. It broke a support area and it's looking ugly. Yes, those things are true. But if this thing finds support somewhere in this area, and this thing, what's the dollar at right now? 102. If the dollar holds 100 and this thing starts working its way back up, you're going to see a mess. You're going to see a bearish mess across the board, most likely. So please keep an eye on this. I mean, it's the beginning of the week right now, so that's a weekly bullish pin bar. It's tiny. Doesn't mean anything because, you know, the week just started. But just keep that in mind. And please, Don't listen to these people. Oh, I'm a trend follower and it made the lower low, so I'm going to short the dollar. Short right into the lows, just like everyone else. Okay, enough of my rants. Let's take a look at your questions, shall we? So let me put Bitcoin back up on here. If you guys want to see like S&P and all that stuff, let me know. By the way, I pointed out the dollar. So all that dollar talk is going to also be relative to gold and silver. And I saw some questions here about that. All right, so Mr. Plow, so you got my answers on that. Okay, so Levant, XAU, USD. XAU, USD. All right, now let's take a look. Now, again, this looks very similar. It's the inverse of the dollar, right? So let's go to the weekly chart. So gold looks interesting. And again, it's vertical, just like Bitcoin. This is basically just an anti-dollar move. Look at the location. Okay, look at the location. Yeah, it's interesting. It looks nice. If you're long gold from low prices, great. This is a great place to take some money off the table. That's really all I can say about this. If you want me to say gold is going to 5,000, you got the wrong person, because all we have here on gold is a range, and we're not even at the range high. Okay, we're getting close to the range high, but this is not a time to buy gold. Again, if you have a problem with your emotions when you see things like this and you think, oh, gold is looking good now, maybe now is a good time, you got this all wrong. Okay, you should be thinking long gold at lows, and it's very hard to buy lows. Only after the fact does it look good. Okay, but you need to be thinking that when it's testing or pushing lows. Now, it's a very hard trade to take, but the thing is, now you're taking all that risk off of all the people that managed to buy gold in these areas, and they're selling here. You're taking it off their hands like a nice retail trader. Thank you for making them profitable. Okay, that's your job, by the way, to buy now, to take the risk off of their hands who bought earlier. So this is not a place to buy. This is a place to exit, all right, take profits, reduce positions, okay, and look for shorts near the range high area. Of course, we're going to need the dollar to rally. Right now, there's really nothing to do here. I wouldn't short gold right now, and gold is going to be a tough short, but you have to look at these areas. You have to look at this resistance area and see what kind of pattern do we get. Do we get a double top up there? Do we get like a big weekly pin bar or something like that? We have to see. All right, but that move should also be confirmed by the dollar index. If it's not, just don't get in this thing's way. So I don't know what you're thinking with gold, but this is not a place to be going long. It's a high risk location. If you want to go long, look for the pullbacks. Okay, look for your support. This is your first support on gold. That's 1,800. So that's a nice 115 point move. All right, which is very possible. That's the place to give a long a try if you're interested in a long. That's where your reward risk is most reasonable, and your probability at least of a bullish attempt is more probable there, not here. Does that make sense? So silver is going to be the same story. Even though I'm going to buy silver because silver has to catch up to gold. Again, look at this. Okay, you're buying into resistance areas. Just when you're unsure, go to a weekly chart. Look at this. So do you really want to be buying silver in this area? I wouldn't. This is a place to sell silver. This is a place to unload. These things are just in a range, okay? And they're starting to test the range high. I mean, look at this. This entire structure on silver, this dates back to 2020, right? This is a multi-year range, and we are now sort of fooling around in the midpoint, trying to work its way to the upper part of the range. Only retail traders get caught in such areas because they can't control themselves. They have no emotional check. Okay, you need to be emotionally intelligent. Very smart people get caught in these things. This is not a function of intelligence, right? It's a function of emotional intelligence. So this is a high risk area you're going into. If you're long silver, great place to unload, right? And lock in profits and unload to the retail traders who don't know any better. That's what this area is. So please keep that in mind as this thing goes forward. Don't get sucked in. There's going to be a lot of talk. Keep in mind, there's going to be a lot of talk of, silver is going to go to 200 and all this conspiracy theory nonsense and blah, blah, blah. And all you need is the Federal Reserve to come out of nowhere and surprise everyone and say, oh yeah, we're going to raise rates a little more because whatever, for whatever reason. And the market is obviously not pricing that in. It's a surprise, okay? So that's what charts cannot help us see. We cannot see surprises in the future. So all we can do is account for the risk. And this is a high risk place for longs. So just like gold, if you want to be long silver, wait for a pullback and then see if the higher low develops. I'm playing that same game with Bitcoin. Okay, this right here, you can say, oh, look, we have a higher low and silver's trying to break out. Okay, if you want to go for something like that, it's aggressive. And just keep in mind, the move may not go very far. So as long as you're aware of the risk and you want to play that aggressive move, that's up to you. I typically focus on the location, and I don't like trades like that, unless of course it's like a day trade. That's another story. But swing trades, I just rather look for something better. Okay, and sometimes that means waiting out for a little while, and people don't like waiting. And I've always been a big proponent of waiting, and I miss moves because of that. People get very frustrated. I understand, but I can't help you with your own lack of control. I can't help you with that. I've developed mine, and I know what to look for, and I don't suffer as a result. Okay, my account doesn't suffer. It stays intact, and I can afford to miss thousands of moves, and I still have money for moves in the future. All right, so that's gold and silver. All right, let's move along here. Let me see what else that I got. Okay, any ideas on copper? So copper. Let's see, can I even pull that up on here? Let's see, copper. So we can look at copper futures here. I guess this is spot right here, capital.com. It's the same. Look, it's a metal. It's going to follow gold and silver. All right. So again, this don't get, this is the CFD of copper. Don't get all caught up in these bullish movements. This can easily be just a bear market rally, or it's just a short squeeze. I mean, look where you are. I don't know. I don't even follow copper. All right. And you're going to have all the experts come out. Oh, you know, they need copper because when they build a house, they use a lot of copper, and they're going to build a lot of homes. And yeah, and oh, yeah, it's true. I'm going to buy copper. No, look at the resistance area. I wouldn't buy copper here. This is if you manage to buy it at an earlier price for whatever reason, now is a good time to unload. All the metals are going to look similar. And you could say, but isn't this a bullish trend? This is, right, on this weekly chart, but you don't want to be buying into a resistance. You want to buy a support. This is not a support. Keep it that simple, right? Maybe the next support, you want to give it a try. Okay, that's giving it a try. But again, the thing is playing defense in this game, a strong defense. Everyone's focused on offense, all right? It doesn't matter how good you are at offense. If you can't protect your money, you're going to lose. It's that simple. All right. It's just like if you're a football team and you have a great offense and you score lots of points, but your defense stinks and the other team scores more points than you can score, you still lose. Defense is the key, especially to this game. You have to be defensive everywhere, even with the type of information that you consume, because 99% of the information that retail traders consume is nonsense. 99% of it, I'm willing to say that. That's why Forex brokers trade against you. All right. So let's see. Okay, I took care of that. Hopefully, I took care of that echo. Okay, I'm behind here. I'm just trying to catch up. Let me see. Has this thing fixed itself? Usually, these things don't fix themselves. Let me see. No. Yeah, this trading view thing really bothers me because I'm supposed to be simulcasting. All right. Let me see what else we got here. Answering questions. All right. Oh, from Latvia. Hey, Zelta, good to see you. Okay, cool. All right, I'm just going through the comments here. Okay, this was like an hour ago. Man, I talk so much. All right, that was the economic calendar. Let's see what else we have here. Can you take a look at, okay, PD. All right, so I'm going to look at one, all right, because I want to give other people a chance here. This is PDD. I'm not going to attempt to pronounce that. I guess it's a Chinese stock. All right, so let's take a look at this. Right off the bat, general trend is bullish, right? I don't even have to spend any time looking at that. Let's look at the weekly chart, right, to get some perspective. So here's the thing. So going back, right now, so this looks bullish, but when you look at it in light of this, it's less bullish. You see that? Because you have some resistance areas that you're competing with here. Interestingly enough, you have higher lows and you have higher highs. But again, just like all the metals and all the other counter dollar stuff that we looked at, you're still, these things are pushing resistances, right? So if you're looking for longs, you missed the long. These are bad. These are high risk places for longs, right? You should be looking at resistance levels. Your next one is going to be around there somewhere. So you can even call this a resistance zone, right? And you can see failure somewhere inside of that zone. So as a swing trader, that's not worth taking the risk. I wouldn't go near that. So you want to find your supports, right? You have a support right here in this area. That would be a more reliable support. You're going to have to test that. So the market's going to have to pull back. That's 76.38, right? That's a good 20 points from here. So that's a significant pullback on something like this. Can it deliver that? I don't know. It's up to the market. So the mistake you don't want to make is chase this on the swing trade time frame. Now, if you have the ability to day trade this stock, that's another story. You want to work with it while it still has this bullish momentum, this bullish configuration. Okay, great. You try to take something out each day, but if you try to hold on to this, you're taking risk you're taking risk. You're assuming risk in a very risky area, right? And you're likely to get caught in the pullback, which is what you should be waiting for as the swing trader. I know it requires a lot of patience. Maybe you'll get a tight pullback, something like this. Maybe you get one of those, right? And maybe you can work with that. All right, but the stocks like this, and again, that was the weekly. So when you look at the daily, it's just a little clearer. Okay. So you have this situation here. Again, you're going into a resistance. I wouldn't touch it. Wait for something like this and see if you can get another pullback. You may even see, look, that support was tested, right? That old resistance you support, but that's tight because, look how close it is. So I would rather see something retest somewhere inside of this zone and give you a new buy signal if you're going to work with that. All right. Otherwise, if you take this, it's aggressive and you're going to have to use 93.5 as your stop, and you're likely to get stopped out, right, over the next few weeks, especially if, look, this is a NASDAQ stock, right? Hopefully that's the right stock, but that's a NASDAQ stock. Look at the NASDAQ. Whenever you trade a stock, see what the parent index, and take a look at the parent index. Look at the NASDAQ. This is the NASDAQ 100, okay? Same thing like a Bitcoin, right? All these things look the same. This is a counter dollar move. And all of this nonsense started after CPI. We are still fooling around in a key resistance area. And even if the NASDAQ pushes a little further, look what you're dealing with. I wouldn't want to be long here. This is risky. All right. This is not okay. We're out of the clear now, and the market's gonna, now is the time to be bullish and blah blah blah. Don't get suckered into that. All right. The way to play this is not to buy it now. Don't feel like you're missing anything. Wait for supports. If this resistance area holds, it's still very possible that we pull back to a support. Okay. We attempt to bounce and then we fail. That's possible. I'm not saying it will happen because there's no way to know. But keep in mind, the bigger picture is not bullish. This is just a squeeze. That's all this is. Look, there was a similar squeeze back here and it never went anywhere. Don't get fooled. Okay. If the bond market, and the bond market's going to be a key factor here. If the bond market can't break that resistance that I showed you earlier, these things are not likely to go anywhere. Focus on the bond market. Okay. Stop grasping what's in front of you. Stop being Captain Obvious. Take your Captain Obvious hat off if you want to get anywhere in this game. That's one of the points that I hope to drive across in these streams. Okay. I want to give you actual perspective. All right. There's a whole bunch of Fed speeches. Oh, is there? Okay. So if there's February Fed. All right. So, but what though? What Fed speech? That was a while ago. Can you clarify on the Fed speech? Okay. All right. Hey, Sam, good to see you. Oh, I didn't realize you're from Florida. Cool. Belgium. You're shorting. All right. Man, you guys are shorting too early, man. Too early. Oh, we got Mark from the UK. Erdia. Freeloader. USPPI. Okay, got that. Alex, are we seeing Bitcoin? No, I don't think so. I don't think so. Look, Bitcoin and altcoins, they can get out of hand, right? They can get exaggerated a little bit. There's no, it's not like a computer is controlling that correlation. It's just people overreacting. And if there are more retail traders in Bitcoin, it can overreact. So keep in mind, the relationships are not one-to-one, all right? This thing can overextend a bit, even though the markets, like the S&P may be more muted. All right, just please keep that in mind. These things are messy. Much respect. Okay, it's a good that weekly. Okay, cool. Yeah, I mean, it's important. That's the whole idea. You know, I want you guys to come away with objectivity, not nonsense, because everywhere you look, I mean, it's really mind-boggling. Everywhere you look, and it's because one, there's no accountability. People can use fake names. They could say whatever they want, and they're just trying to drive traffic. Do you realize you can get paid from YouTube from just driving traffic in the YouTube ads, right? Doesn't matter what you say. And you don't even have to sell a product. You can say like, yeah, all right, Bitcoin's going here and there, and then you get 100,000 views, and you make money off of that. That's what these guys are doing, right? And so he's not selling a product. He doesn't have to sell a product. He's monetizing. He's capitalizing on your attention, okay? And that's the inefficiency he's capitalizing on. All right. So okay, no problem. You got to know basic math and be comfortable with high risk. Well, yeah, I'd agree. You definitely should know basic math and high risk, definitely. But you don't have to. Not everything has to be high risk. I'm risk adverse. Like I don't like to take big risks, and I know sometimes I'm willing to take a bigger risk, but it really depends on the situation. But your personality is going to play an important role in that. Okay, Alameda Research. Yeah. Does it make sense to look at fib levels for a move like this? That's a good question, Joel. You can, all right. So when you get, let me go back to my other Bitcoin chart. This chart has got all these lines on it. Let me go back to my 8-cap chart. Let me see. Here it is. All right. It's a little cleaner. So Joel asks, does it make sense to use fibs? You can, but you don't have to. When it comes to my training program, Joel, as you know, because you've been going through it, fibs are sort of like a secondary confirmation, and you could measure a move like this, all right? And you can basically, when you have a trend move like this, like a very pronounced move, you can look at that 382 area, which is basically going to be like right around there, as a potential support, which is way above this actual support, the historical support, right? So when you have a situation like that, so which one do I use? You use both. You say, well, I have a zone, and it gives you a zone, which I explained that in the training. But you have a zone, and that becomes your support zone where you can be looking for some type of reversal. Now, keep in mind, if we get the pullback, be careful with the single candle reversal. A lot of times you get the single candle, and then it doesn't go anywhere, and it eventually turns into like a double bottom. The double bottom, if you get that in that type of situation, I think is a much more probable trade. Those are one of more of my favorite setups, but they're rare. You don't see them, and they take forever to wait for. And a lot of times, if you wait just for that, you miss a lot of moves. So, but that's if that comes along, that would be a nice setup. Okay. Sure, you can use fibs, but you will find looking at support and resistance will give you, yeah. So like I said, fibs are like secondary. Okay. So you're just basically reinforcing, and the fib can help you assemble or construct the zone to kind of give you something, an area to anticipate. Okay, XRP, Gary wants to see. All right, let's take a look. XRP USD. So an altcoin, right? Now, here's the thing with these altcoins. So you notice, does this not look similar to the Bitcoin situation? Does that, I mean, they all have rallied, interestingly enough, right? They're all following the leader. You're in a resistance area, right? Just like everything else. Now, if Bitcoin cannot continue its rally beyond 22K, where do you think this is going to go? It's likely that maybe you test this little area up in here, which would turn into a failed high, right? That just so happens to be an old support level. So you have all of this area for potential failure. Keep that in mind. A lot of fools are going to buy into that. They're going to buy that breakout thinking they're going to say, we're in the next bull market for altcoins. You're going to see all the early investors are going to make billions. Do you guys remember those titles? I remember them. So you're going to see stuff like that. Please don't be foolish. Understand you are in a resistance. The idea here is to be objective. This is not a support. It's a resistance. There's no other argument for that. Okay. We can't say, oh, it's kind of a support. No, it's a resistance. So this is not a good place to be going long. It's high risk. If you want to go long, let it break out, let it retest. That's another story, right? But we don't have that yet. I suspect if Bitcoin fails, all of these things are just going to get caught at these range highs all of these fools that, are blindly optimistic are just going to get caught, and they're all going to be banging it out over here. That's my suspicion. Is that an opinion I'm going to hold on to and trade on? No, but that's what I suspect. If I was going to trade this, I don't trade these altcoins, but if I was going to, I would be looking for a test of support, right? Or range low. I'd be looking for the range low, right? This is a nice range. You have a consolidation, and this would be a nice high probability location if the market can deliver such an opportunity. That's what I'd be looking for, okay? Anything besides that, like any kind of noise or any kind of garbage in this area, I would regard as noise. Don't get caught up in that, okay? Look at your general location. Look at, are you at a support? Are you at a resistance? And how is that relative to the bigger picture trend? But more importantly, again, something like our XRP does not trade in isolation. It follows Bitcoin. So you should be following Bitcoin, okay? And what Bitcoin is doing, and then compare that to this. Now, also keep in mind, because when something like this happens, everyone quickly forgets about the oncoming regulation. They love to forget about that. But these things are going to face significant regulation in the coming months. How is that regulation going to affect these things? We don't know. It's unknown. There can be some bearish surprises in there. We don't know. So we can't sit there and go all in, but, oh yeah, everything's going to be fine. Don't listen to that hype. We have a lot of risk factors on the horizon, okay, especially with these, especially this one, because this one already has court cases all over the place, okay? So don't get caught up in that nonsense. Be careful. If you're long from a low price, I would suggest taking a little off the table at this range high. Does that make sense? Take advantage of all these mindless, ignorant retail traders who follow fake gurus on TikTok. All right. By the way, I think I'm going to have to start something on TikTok. Trust me, I don't want to. But anyway, all right. I'm new, so forgive my question. Why would you not go short Bitcoin? Because it's just not in my risk profile. I'm in the US. So I have to have a margin I have to jump through all these hoops. If I want to get short, I can short something else. Okay, I can short the S&P, I can short the NASDAQ. It's basically the same thing. So that's why I don't short Bitcoin. I'd rather just play on the long side. It's just easier. Okay, Bitcoin is just correlated to everything else. So if I want to short something, there are plenty of other instruments I can short in a much easier way that are going to follow the same idea. Okay, or I could just buy the dollar. All right, so that's the reason. If I'm long from 19.4 level on Bitcoin, I took half my trade off the table at 21.3. Where would be a reasonable stop between 19.4 and where we're in? Well, all right. If you're long from 19.4, all right, and you took some money off, that's a nice profit. The stop at this point, if you're that green, I mean, Bitcoin is nicely higher from there. Let me just go back to that Bitcoin chart. So if you're long from 19.4, you must have gotten to that on a smaller time frame. So 19.4, yeah, man, you bought the breakout on that one. At this point, and this thing right now is at 21. So the thing to do, and my suggestion, again, I can't tell you how to trade, but my suggestion, put the stop to break even and make it a risk-free trade, because you locked in some profit and now you just let it ride, right? And if it pulls back to your stop, you're just giving back profit instead of having the thing turn into a loss. That's how I would treat something like that. And if this bullish momentum wants to continue, then at some other point, you find a point where you can raise the stop again, and now you have a profitable trade no matter what, okay? You're not going to get the max profit. That's another story, okay? If you're going for the max profit, you're gambling, but risk-free, you have the opportunity at this point to set up a risk-free trade, meaning it goes to your stop and breaks you out for break even, on the pullback, okay? That, of course, that's not what you want, but you're not losing actual money from your account. You're just giving back profit, and that's not a loss. You're just giving back the market's money. All right, does that make sense? So that's what I would suggest, or that's what I would do if I was long at this point, and you were that far into it like that. Stop to break even. Okay, tempted to set it at break even. Yeah, okay, you got it. Right. So no, there's nothing wrong with break even, right? Nothing wrong. And then look, you have to take yourself out of the equation as much as possible and let the market do the work. Okay, don't try to outthink the market. You'll never win. If you put the stop to break even, you now have a risk-free trade, and now whatever happens, it's up to the market. And then you want to put another profit target somewhere higher. Maybe you want to put it at 22.5. Maybe you want to put it at 23. You're only winning, but don't think you're going to get the top. Okay, that's the mistake. People, oh, I sold it at 23 and it went to 26. How can I know? You can't know. It's random. Okay, so don't get caught in that. Don't get caught in that cycle. Okay, Senk, how are you? Chenk, from Vienna. Oh, nice. Okay, yeah. Well, I'm just doing them on Mondays once a week. Look at the replays these days. Okay, no problem. Thank you for stopping by. Okay, cool. Makes total sense. Okay, no problem. DJI, please. Okay, Javi. Hey, Javi, how are you? From Israel. I remember you. You're talking about the Dow. So we can look at. Let me see. I guess I have here. We can look at the CFD right from forex.com, or you know what I like to look at? US 30. It's the same thing. Okay, let's take a look at US 30, and we can look at currency.com here. This is so look, the Dow, the Dow 30 stocks, they're going to follow the NASDAQ and S&P. All the indices follow each other pretty much. There may be some slight, discrepancies, but they usually follow each other to the T. Okay, they follow each other very closely. You're at a resistance. Bad place to be buying the Dow, just like bad place to be buying the NASDAQ. It's the same story. Okay, now you have this higher low. Interestingly enough, I mean the Dow is it looks much healthier than the NASDAQ and the S&P, right? But the thing is, we are still at a resistance. This is a nice clear higher low, all right? And a higher high is likely to eventually follow. But until that higher high is in place, we can't call this a trend change just yet, although it's possible. This thing can fail here and test the low. Only the market can answer that. We can't sit here and forecast it. So let's look at the weekly chart, right? Let's just see what's going on here in this weekly picture. I mean, very interesting move. And certainly relatively strong. Let's just compare this to the NASDAQ, right? Let's just look back at that NASDAQ chart. I mean, look at that, right? The NASDAQ is way behind relative to the Dow. So the Dow, we can say, is relatively strong, and perhaps it's one of the leaders in this, because look at that, much better looking chart. But again, we don't have the change. The only argument we can make here is you are in a resistance area, and this is not a good place to be buying. Now, if you want to buy the breakout, that's up to you. You're going to take a lot of risk, okay? If this thing fails and you have this entire zone to fail, you fail inside there, you may be seeing a test of these lows. And what would be a catalyst for something like that? That PPI number. Maybe there's some Fed talk that comes out and turns this thing around surprisingly. Maybe the Fed talks it the other way. There's no way to know. But if there's a negative surprise, you are in a risky location for longs. That's all I can tell you. Okay, so great place to take profit. Otherwise, look for the pullback. Okay, look for the pullback if you're interested in longs. Okay, okay, no problem. HYDR. Okay, it's an EFT. Okay, HY. Let me put that in here. HYDR. Let's see, what is that? Is this correct on the MOEX? Is that right? HYDR. Okay, Joel, correct me if I'm wrong. But this is what I'm looking at here. Let's go straight to the weekly chart while I'm waiting for Joe's response. Well, this looks range bound. I mean, even on the midterm trend here, I mean, look where you are. You're right inside of this mess. Look at this. All of this fooling around that midpoint. Bad place for either side. Okay. If you're looking for longs, look for the first support. That's just around this area here. So that would be at 73 cents. Okay, again, correct me if I'm on the wrong chart. And your resistance is going to be somewhere around there. That's your range on this thing. Generally, I mean, you can argue generally that this is a broad higher low. Okay, but you're in the midpoint. Midpoints are the most random points, so anything can happen here. If you're looking for longs, look for the range low. If you're looking for shorts, look for the range high. Keep in mind that this thing can break out because the general structure here, it's a higher low. Higher high is likely, but I wouldn't take those chances here. Okay, wait for some kind of support. That's all I can say. And that would be around 73 cents. Is that right? How low is this thing? 53 cents? Okay. Going back there. All right. So I hope that answers your question. I'll take a few more. So that's not the right one. HYDR. Okay, hold on. HYDR. Oh, the hydrogen ETF. I'm sorry. There we go. Got it. See, that's why I asked you 10 times. Okay. So I can go through this quickly. So you have this situation, right? So this is Global X Hydrogen ETF. Hydrogen. All right. You have a high or low. This is the weekly chart. You're just taking out this high. So you have this little situation, but look, here's the problem with it, Joel. You have a lower high right here, okay? And this, you may see another lower high. Even though there is a higher low, you may see another failure somewhere in there. Now, this could be the beginning of a trend change because you have a minor resistance break, but this thing could be like a three-legged zigzag formation. This could be, right? Which will turn it right around and you may see a test of lows again. So I don't know. I don't know exactly. I don't understand their business. Like I don't know what their situation is. What's a hydrogen ETF? So I don't know what stocks are in here. I don't know what their relationship is with debt. Okay, but if rates are a factor and rates rise, don't expect this thing to go anywhere. That's all I can say. Okay, like if they're like mining, for example, a lot of mining companies, they have a lot of debt, and when borrowing money becomes expensive, they suffer. All right, so that's how I would treat something like that. Don't use this chart's ugly. Use the weekly chart. And you have this possible breakout. Let this thing either continue and pull back, test support, or let this thing test the support if you're interested in a swing trade type of situation. If you're thinking longer term, again, there's never a wrong time to take long-term trades. You just have to be small and then really plan your purchases at the lower prices, right? Pick them out in advance, like this $10 area. It's reasonable to test that area again. It's very reasonable, right? It was just there not too long ago, maybe a week, 2 weeks ago. So it can test that area again. That's really where you should be putting on risk, right? And that's when I'm looking at my long-term portfolio. That's what I'm going to be doing, by the way. I'm going to be putting limit orders under the market. You're not going to see any market orders. I'm not going to buy anything at market because I believe we can get better prices on everything, even things that I'm long-term bullish on. Can always get better prices, right? And I don't care if I miss something. So anyway, so I hope that helps. Okay. So S&P 500. All right. So S&P 500 is going to be the same story as the Dow and the NASDAQ. It's the same deal. All right. Let me just see how we're doing here. All right. So GPRE. Let me take a look at the stock. GPRE. Everything that I said about the NASDAQ and all that, that's the S&P. Same thing with the Dow. I mean, the NASDAQ and the S&P are much weaker than the Dow. Okay, but if the Dow pulls back, they're all going to pull back. All right, it's just Dow seems to be relatively strong for whatever reason, maybe because it's only 30 stocks. Okay, all right, now here's this GPRE, and here's the thing, just like that hydrogen stock we just looked at, look where we are, right? That's a midpoint. So this is a highly random area. Again, it's very tempting. People think that these are trend breakouts. Oh, the trend's changing, and your RSI is going to tell you this. Look at the range low and look at the range high. This is a range. This is a daily chart. Let's take a quick look at the weekly chart. Okay, this is the weekly chart. Let me just make this a little clearer. So you're in a range, and you're at the midpoint of the range. You're in a consolidation. So the best thing to do here is wait for a test of support. You may have to wait a month. Okay. I mean, look, it obviously it took 4 weeks to get to this midpoint. So you want to see if you can test that low again. That's the proper place for better risk reward and for a higher probability scenario going your way. Where here it's completely random, right? 50-50. You may take it, it may work, it may not work. Flip a coin. Okay. Otherwise, you're looking at this area for selling, taking profits, possibly going short. You have to be careful on the short side, though, because there's no guarantee that this thing will hold this resistance. It may break through, especially if the market's changing and the market starts to transition into more of a bullish, more optimistic situation. These things may start breaking out of these resistances. So I wouldn't be in a hurry to short them up here. Okay, I'd be looking for supports, especially since this is a higher low consolidation, right? Kind of like that gold and silver situation. Does that make sense? Okay. All right. So keep that in mind. Again, the idea here is to point you out to like what is objective and really where, what these things look like in terms of reward risk. All right. You can take these trades at any prices, but you have to understand markets are random and you're going to be wrong half the time. That's what that means. So that's why you want to isolate potential opportunities that may take place in the future and prepare for them, like a range low or a range high. Don't chase the market now. Don't react to what you see, right? That's what Captain Obvious does. Take your Captain Obvious hat off, right? And look ahead, not behind. Okay, what do you think of following politician stock trades? Some people follow while others, okay. Yeah, there's some interesting things to that, Alex, because politicians are insiders. So they know things that we don't know, right? And that's why politicians have a tendency to beat the market while markets are generally not beatable. How can they beat the market? They don't know anything about the markets, but they have inside information. So I think there's some value to that. But the question is, what is it like? Where are you getting the information from? And how does it work? Like, are they reporting? Is it like a month after they made their decision? Because if that's the case, right, if you're looking at 3 months, oh, I'm looking at her portfolio, but this was 3 months ago, that's kind of useless. You need to know like what she's doing now, okay, not 3 months ago, because she could be out and then you're not going to know that for another 3 months. So that's the thing with that. But I think there is some value, and if you can find out in a timely way what they are doing, then I think there's some value to that. And they could be wrong too, but they have inside information. They're not taking the same type of chances that we are, okay? They have better information than we do. They have to report what they're doing, but you get, 14 days. That's kind of useless. I mean, I don't know, because she may buy something, she has to report it, and then she's out. And then 14 days, the typical, oh, she bought it 14 days ago, I'm going to buy it now. She's selling it to you. So if you can get that information sooner, then you'd have more of an advantage. But that, since everyone has the same information, that's a problem. Okay. I like the idea, but the timeliness isn't very good. All right, you guys. So thank you. Hey, guys, I gotta go. So thank you for all of your questions. Thank you for participating. I got to fix this TradingView situation, so I'm sorry that I'm not on there, but you guys were great. Click on the links in the descriptive portion. I would love to see more of you in my Discord channel. I also have a premium membership, and I have a lot of improvements that are coming. Okay, so I'll be talking about that as I go. All right, so everyone, enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching. That's right, I will be on Wednesday. Bill mentioned Wednesday. I will be streaming again on Wednesday at 9:30 a.m. Eastern time. Okay, that's my second. So I stream now on Mondays and Wednesdays. Okay, so I'll check you guys out then. Come check me out then. All right, enjoy the rest of your day, guys. The rest of your evening. Thank you again for watching.